Next on the agenda is a panel discussion on financing economic growth in the Maldives, alternative financing options. But before we begin the panel discussion, first we have a presentation on this topic by the chairperson of Academic Committee of CA Maldives, Mr. Mohamed Haleem. Mr. Mohamed Haleem.
Bismillahirrahmanirrahim. Very good afternoon to all of you. Thank you for being here. And this topic is very important for us now. And also, it is a sensitive topic as well. This is financing economic growth in the Maldives, alternative financing options. So, this is part of the panel discussion. So I will try to make this as short as possible. Okay. Okay, sorry for this. Those in 17th century, there was some established financial sector in some of the developed nations in Europe. This sector came to Maldives in 20th century. So when we see some of the earliest publications or articles dated back to 1959, that was Diriulung Kurierumang Ehi for Kodde for Vade Fund. So that means to help to improve the people's life. That was published on 3rd January 1959. And that was one of the earliest known newspapers in the Maldives, where we see about the financial sector and also the intermediaries setups here in Maldives. But modern banking was introduced in Maldives during February 1974 with the State Bank of India. And the purpose was to facilitate international trade. That was before the establishment of our central bank. So central bank was introduced in the Maldives under Maldives Monetary Authority Act in 1981 and subsequently revised 3 times in 2007, 15, and also in 2020. Now, under purview of Maldives Monetary Authority, so on the central bank, there are a total 8 commercial banks and also non-bank financial institutions include insurance companies, total 5, and finance companies 3, money remittance providers 2, and also payment service providers 2. So total 20 institutions under the regulation of Maldives Monetary Authority Central Bank. And we have to note that Pension Administration Office, the pension fund, is regulated by the Capital Market Development Authority. So that is a separate setup. And when we talk about the establishment of CMDA, CMDA was established with Maldives Securities Act in 2006 and responsible for regulating the development of Maldives capital market. That was in 2006. That was a new development. And also CMDA has the regulatory mandate to supervise Pension Administration Office, that is to administer the Maldives remittance pension scheme under the Maldives Pension Act. That was in 2009. Then, however, now we have an established capital market, though there are limited transactions. The reality is, even now, the banking sector represents more than 70% of our financial market or financial sector. And just 22% of our GDP is from the capital market according to the statistics of 2019. And banking sector represents 90% of the financial institutions' assets in 2020. So out of those financial institutions, under the regulations of Maldives Monetary Authority and also capital market and pension fund included, 90% of the financial market is from the banking sector. Okay, now, when we talk about the broad money in the economy, here, broad money to GDP ratio, there is around 38% average when we consider the period from 1986 to 2019, just 38%. And when we see other OECD countries, there is well above 100% on average during this period. And this means Maldives lags far behind compared to upper middle income countries, and this explained the issues of capital constraints in our economy. Here, domestic credit to the private sector, percentage of GDP in 2021. Here, when we see Maldives, it is just above 50%, so 54%. But see countries like Mauritius, Fiji, Malaysia, Thailand, and Singapore, on average, above 100% of domestic credit from financial sector to the private sector, in financial market to the private sector. Here in Maldives, we have the percentage of 53% of GDP. And when we see some statistics, after contraction of, because of COVID pandemic in the year 2020, there was a decline of our economic growth by 34%. But there was an increase by 32% in 2021 because of that aftermath effect of COVID pandemic. Annual growth, however, of credit to the private sector in the Maldives, the growth rate is 5% in 2021. So our economic growth was 32% compared to 2021, but the credit growth to the private sector in the financial market is just 5%. So this is something of a concern for us. And Maldives GDP growth projected at 12% for 2022, and also according to IMF, the GDP growth is expected at 32% globally. And our SME and also our private sector faces difficulties in accessing finance, accessing bank finance because of so many reasons. Here some of the reasons are here because when we see the restrictions or the covenants or the terms of the borrowing agreements of the financial institutions, we see the debt service coverage ratio, they are maintaining not less than 1.5 times. So they are maintaining 1.5 times and above for the debt service coverage ratio, and also for the collateral, banks' requirement here is between 130% to 150% of the principal borrowing fund. So this is a major challenge for small companies and SMEs to access the bank finance here in Maldives. And there, requiring us to pay, I mean the SMEs and companies to pay 30% of equity as well. So this is also an issue in accessing bank finance here in Maldives. Now, share of Maldives banking credit by industry, when we see the statistics of 2021, you can see 40% of that credit is going to the tourism sector. 40% is going to the tourism sector for tourism-related developments and infrastructure. When we consider the credit by industry in banking sector, as per the statistics from Maldives Monetary Authority for year 2021. And when we see construction, commerce, and real estate, and when we see fishing, manufacturing, and also other sectors like agriculture or electricity, energy, we see zero in sectoral distribution of the credit given by the banks in 2021. So now this is the reality. So when we see the opportunities here for alternative finance, here when we see Maldives Securities Act came into effect in 2006, and also because of the Securities Act, now parties, licensed parties like brokers, investment advisors, and also custodians and other private financial institutions now have the opportunities to borrow, to raise finance through capital market. This is an opportunity to raise finance in financial sector, non-banking financial sector, because of the Securities Act. And also, when we see statistics published by UNDP Maldives this year, 2022, we see the investments. Maldives will require the investments of more than 3.1 billion between 2018 to 2030 for water, energy, and other environment-related projects to attain national determined contributions targets and to reach our target of achieving 70% of renewable energy mix by 2030. So this is, there will be a shortage of funds to get this 3.1 billion from our banking system. So this is an opportunity for the investors and also for the companies, financial institutions to borrow funds through non-banking sector, because our banking system is not that strong enough to support 3.1 billion, even when we consider these statistics alone published by UNDP Maldives, because our target is to achieve 70% of renewable energy mix by 2023. But when we see the banking finance statistics, in 2021, it was 0 to 1% allocation to these key areas. So this is an opportunity for the emerging institutions and private sector companies to raise finance through private sector arrangements. And also it is unlikely to, according to the statistics and information revealed by UNDP, it is unlikely to meet these targets without international capitals, as available local financing is not considered sufficient enough to support this. And also, when we see some of the historical figures between 2013 to 2020, the 7-year historical figures, we see a gap of approximately 186 million USD per annum in these related environment, sustainability, and also blue economy related areas. So these are some of the areas our investors and also the financial institutions trying to get opportunities in, through non-banking financial sector can explore. Okay, so here, the last slide, after that we will have the panel discussion. Now, green in the financial capital market in the country would require Maldives to introduce financial framework according to the statistics by UNDP Maldives. Again, because, and also, an increase in number of countries are optimizing to issue some sort of bonds to achieve SDG-aligned green targets. For example, sustainable development goals related targets, they issued bonds and other financial instruments. One example is here given from Indonesia, became the first country to issue green sukuk, raising 3 billion at the interest rate of 3.75 to 4.4%. So 3 billion raised by Indonesia through green sukuk to finance the projects of sustainable development goals of that country. Now, the issuance of sustainability-linked bonds and other financial instruments, that is one area here in Maldives we can explore, because these are some opportunities for us, for investors and financial institutions, because according to the statistics of UNDP, we don't have enough funds to support these types of projects. And also, government policy is to achieve 70% of renewable energy mix by the year 2023. So this is a key area where we can design different products, and also we can attract investors to invest, because there will come potential policies from the government to allow some of the lenience to attract investors and raise finance to support these projects if the government to achieve these targets. Okay, I will stop here and we will continue now in the panel. We have two distinguished professionals and we want to hear from them on the subject.
Thank you, Mr. Haleem, for the insightful presentation.